Okay, boys. This was meant to be a live call, but I got delayed at my in-laws, and I'm home an hour and a half later than I expected. But I still need to say a few things and do a review. Most of you, the American guys, will catch this tomorrow. So I don't necessarily have to be here. Whoever joins here, that's fine. I'm okay with that. But in the interim, we'll just do a weekly review, right? My thoughts on how I played the week so far and why. So again, starting on a weekly, looking at the previous week, you can see it was a bit of a doji candle. So a lot of indecision. We did tap into this weekly FEG right here, which took liquidity of the previous week low. So not much to speak about here. The previous week did close above the week before that, so that's not particularly bearish. We turtle soup Monday 17th weekly low, and we expected a push up on the daily. On the daily, this high here was always of interest, and it's a bit eerie because how do you figure out how this candle formed, right? So we can see that this didn't close above the previous day's highs, right? And we know that the algo should ideally draw to this high as an algo draw, right? We also had on an H4 on this particular day, we were looking, or I was looking particularly at this Godspeed level right here. So we'll just keep that as a Godspeed level, and we'll come back to it. So we had the push down here. If we look at an H4 and what happened here on this weekly candle, if we did something like that, I did mention that this push down, as much as I wanted it to push further to the 2 standard deviations, it got stuck in 1 to 1.5. And what we know of the 1 to 1.5 standard deviations of any OLR of Dexter for projection is that this will either be a silver bullet retracement for an entry, or this will project a manipulation leg and then continuation in the direction of curve, whatever the high time frame order flow is. Then we had these relative equal lows sitting here, and we could mark this entire leg off as our order block. You can see that we did dip significantly into this order block, and we wicked the low, but not invalidated as such because we didn't close below. Now, a max expectation at this point right here, you would have seen me in this particular week say that I wanted the low. Let me see if I can get it. From here, I actually wanted to push down here, then push up, right? But we got this OLR here, and then we pushed down to the level. That's fine. That's okay. Any retracements that follow, if order flow is bullish in this case, right, have the max expectation, and the max expectation at this current point was a retracement to a previous order block range. And the previous order block range of significance is this guy right here. So 1.5 standard deviations are lining up with this order block. We wick below, we don't close below, and we start to close above opposing FEGs like that. You know what to do, right? You can no longer be bearish. And then this started the week of the 24th, and this was this week, right? I think we've covered this here up to this point here, right? On the daily, at this point right here, This Friday candle that pushed up and then dropped also became significant to me as a daily algo draw. Why? Because of the wick up and the failure to close above highs to the left, and on a daily level it came into a Godspeed or rejection block area right there, right? But we missed the H4 Godspeed zone that I had marked off here. So what did I tell you guys? That this high will be taken, and this high that was created here that failed to go above and tap into that H4 Godspeed will be inducement, right? They'll want to take that high at some point. So when we drill down to this week, I wanted to see the daily low run. Let's just get to Y. Here, right? Was this Friday? This is Monday. I wanted to see Friday's low run and then a push upward, because at that particular point we were just ranging here, right? There's liquidity in here. There's still this high time frame IFEG sitting up here, and we have all of this liquidity resting below here. In fact, what I did mark at this point may have been this Godspeed level right there. Now on Monday, which was here, I managed to take a short in London, looking for the run of Friday's low, right? So Friday's low came in here into this Godspeed level right here that I've marked off below. So just points of interest. And in London, I took my short right here. When we let's see if I can put the indicators on really quickly. Here we go, right? So blue is Asia. This guy here is London. And then this time started the ONS, right? So London takes the Asia highs. We then get a market structure shift here. No significant CSD. It's very slightest right now. I'm a bit finicky or reserved when we wick lows like this without too much of conviction, because you can see that it did close below these lows, so technically a CSD, but there are times where if your bias is incorrect, this will just continue higher. But because our bias was that we wanted to take Friday's low out, which came in down here, my short entry formed in London with speed, and it formed somewhere here, right, in this order block. Up candle range, we closed below it, CSD here, retracement here. I shorted in here with my stop above here. So my trade idea there was something like this on the M5, right? Tap the OB there, stops above the high, and we're targeting all the way down here at least, right? That was the trade idea. So we get some speed down here. We take liquidity to the left, right? But remember, the objective for me is lower. I held my entry through here. We retrace into a breaker or order pairing zone here. And then price pushes into 5 a.m. here into that low, right? I close my entry here. I think I may have went long in here as well. There's a market structure shift right here. So we take a level, OLR, market structure shift happening inside here. As soon as we close these candles, I'm buying these, right? I'm buying these, and I'm buying this here. Goes up, takes this. Now we start to come into New York, right? And I missed the short because I actually wanted this to push higher that day. But let's put the BOR on, right? On M5, we wick above the level, above the BOR. We validate these up candles right here, or the series of up candles here, as an order block. right there, and we tag it we close below here, we close below this low. So if you were playing anything at 930, it would be this 935 candle retracing into this zone right here, right? Whether you take 50% of that zone, whatever it is, let's just find 50% right there. There's 50% here, because the stage is set that this wants to go lower in New York. It runs this low, dips back into the order block at 935, and then it breaks down here. We get a slight pullback, and then it runs one more time. Now, from experience, personal experience, and from what I've been telling you always, I don't ever trust a low that forms here unless we get an OLR off that low. Every level, even a high time frame level, especially if it's new price action, so we had levels like this, and when we push up in here, I'm not a fan or more sure of the probability of the trade going my way unless I see an OLR of that high that like I said, most of you would think the original run of these highs here would be the OLR. I want to see an OLR of the OLR, then my setup to form, right? It came in here. I think I may have been down in M1. And all I'm doing is the same thing over and over again, which is run a low, CSD its high, buy retracements back into the order block. You have this volume imbalance inside here. This particular one I don't think hit 50% on this time frame, or may just have, right? So you're buying retracements back into this order block. If you're still unsure of buying this, then you're going to wait for what? Internal liquidity taken, CSD again, retracement to order block, opening price would be, we'll remove this guy for now, and we'll mark off the M5 opening price right here. So your entry should form here, right? You don't have to go deep into this order block range because there's no visible imbalances inside here. Your entry would form in this range. If you took the range from its highs, then your entry would form in this tiny little imbalance here, limited to the high there, so somewhere there, right? But generally I'd go for the opening price of the series of order blocks. I'd look for an entry to form here. We close back above here, another entry here, and price starts to push up. And I think on this particular day we had, let's put it in, because you would have seen me tell you that I am looking for the rebalance macro equilibrium EQ right here. That's where I closed my trade right there, because that was the draw for me, draw done. Even through all of this shit happening inside here, we'll just remove this right now. Even with any of this happening, you can see how the highs of the BOR is holding as support, right? It runs it here and then it runs again. Now, Expo, you are here at the moment. We did take a short at these highs. You would remember that. And I told you that for me, it was midnight when the market opened here. And I told you that I'd keep my stop above here and let it go because I wanted to see retracement, and the retracement that I wanted to see was these 1050 lows right here, right? As inducement, because on an even lower time frame, there's an order block sitting inside here that was unmitigated by this push down. So this technically becomes liquidity, becomes inducement. I would have wanted to see that get run. What I did do here though is I closed my short when the market opened, because I wasn't going to go to bed thinking about whether my stop got hit, if it's going to run the highs, all kinds of shit. I just didn't want any of that. I already made a good trade from the low here to the rebalance macro equilibrium. Shorted inside here. This ran up a bit. I'm not too concerned about that. I would have had my stop above here, but I did close as it got back into this range. I closed it, not interested. Lo and behold, market opens up and we get all this shit here, right? It runs down and then it runs again. Now, this is the area that I started to get interested. Was this yesterday? This was yesterday, right? I'm standing in line at the Home Affairs, waiting to get my kids' passport picked up. And we had Asia here. London runs. Asia, I wanted to see, I told you two things are going to happen. We are either going to start pushing up here like this, or we are going to go down for these lows first, then start pushing up higher, right? And I wanted my entry to form here inside London. But if you look at what happened, as this starts to play out, the low of the BOR and the mean threshold of the previous day's BOR became like a brick wall. You can see here, 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 and the lows here, right? Just couldn't get through that BOR. And I did take an entry long inside here. We ran a low here. We closed back above the range, CSD, MSS, all of the good things. But I wasn't too happy when it didn't show, especially in this area right here. You can't expect your entry to form, even though there's an MSS opposing FEG being closed above. You ran a low down here. This would have been the perfect time for them to start pushing upward. But if they aren't able to close above the high here and give me personally the CSD that I require, which needs a close above a previous up candle range, then I'm not interested or less interested in any long formations, because if they don't give us the CSD that we want, they are going to come back and dip back into the range, find liquidity, and then try to push. Again, they do that, still no movement, right? The BOR is acting like a brick wall. And it became clear to me that this is now starting to become a big accumulation range, right? And one thing that I'm going to tell you now, and you may have noticed it yourself, and I'll show it to you. Think about the times that you wanted to enter the market, right? And where you would have probably entered, right? Think about it. If you were entering the market in this area down here, you would have most likely entered it, let's say here, in that zone there, right? Just think about this zone here and say I did enter the market in this zone here. How many times have you seen your entry getting run with an OLR and the market either comes back to your entry and continues in the direction of whatever that order flow is, or you see another entry of yours forming exactly where you originally entered or would have wanted to enter anyway? Go back and backtest what I've just told you now. That your entry will be your entry, or your entry can be your entry in the future, either in the direction that you want or in an opposing direction of the current order flow. So if I was looking for longs, then my entry would have again formed here, inside here, in the zone. right? Because I wanted to long inside the zone originally, but they accumulated. We had failure swings happening inside here. We had an OLR down here. Gets back into the range, closes above these lows again. These lows become, if you had to mark off, let's look at this, right? The lowest candle body in the range of these lows before the OLR. Let's say it's here. Or in fact, it's not there. It's here, right? It's there. That when we close back, and this is Zoom understanding, by the way, when we close back above the real low, if this is the real low and this is the OLR in terms of Zoom understanding, when we close back above the range, that the real low in the market should then offer support for continuation. Just think about that, right? So my entry formed inside here. It was before New York. There's your BOR inside here. The 9 a.m. candle in here, and this just started to push higher. And what was I targeting here? I was targeting at this point this high here. I was targeting some Godspeed levels inside here. I can't remember exactly, but mostly it was this high right here, right? Monday's high. I wanted Monday's high taken out. So what I actually got out of it was an entry from down here to up here. I think it was an algo draw as well, if I'm not mistaken, and a Godspeed level. Right? I can check it really quickly. Right, so this was Monday. Yeah. Monday fails to close below these lows. I want to see, let's zoom in there. Right, Monday fails to close below these lows. I want to see Monday's high being taken here, right? Just make it blue because that's what I normally do. So on the lower time frames, my draw is there. Right? I want to see Monday's high get taken out. Now, here, right? Right here. I was done with this trade, and you would have seen me look for, when I marked this off here, it was initially a move like that, and then come for the 1050 lows, and then continue where? Head higher for the orange level marked here, 20.04310. I'm not sure why it's not marking this level off at the moment, but 20.04310. Let me just get that level right, because we'll talk about that. I think it was right there. Or there. 20.04310, right? It was a H4, yeah, H4 Godspeed high there. So the entry for Monday or Tuesday was either going to be, we go down for the 1050 low at Monday, and then we head straight up here, or we come up here, and I want to see then a situation where Max Payne, this low created on Tuesday here, gets taken out into Monday's liquidity or inducement, and then we get this move up here, right? This was the exact move I had marked off. So when we came inside here, I did short. Let's look at it. We come into the blue level here, which is an algo draw. Just give me a sec. We CSD here, right? I think on a 30-second or lower time frame, I'm already entering here. Price moves away, starts to do this, comes back, takes this high out, and drops, right? Now, again, I think one of the guys in the group asked me, because I'm short, why do I want to see this breakaway gap stay open here? Because if they wanted to push lower, then this breakaway gap should stay open. They should never close above it. If they close above it, it's bad news. This is not going lower. This is going higher. What do we have here? We have this OB range right here. There's 50%. So this move down, like the larger H4 range, had a max expectation of the previous order block range before continuation higher. So once it started to close above here, I was out of my positions. I didn't enter any more positions in the day. But I want you to now think about what I told you just now about your entry will be your entry. And if my entry was inside here, right, on a retracement back, let's say this range right here, there, and I draw it out in time right there, even back here, right, that you'll see that once they close the breakaway gap here and price started to push higher, that your entry would have formed as a long now instead of a short at the same level that you would have shorted, or I shorted right here. So I want you to try and use that information as best you can, that these are often times that mitigation will occur. It may be trap traders that were short inside here being given the opportunity to close their positions. But what we may or can or may use it as is an opportunity to take the other side. If I wanted to short here and price is telling me it's not going lower, then if I don't find any entry inside here, that an entry should form here. Where I originally wanted to enter in the other direction, I will find an entry in the direction of the order flow that's currently playing out, right? You'll see it here. We tap the daily highs again. We have this FEG or breakaway gap inside here, containing price, and then price moves away. Now, a lot of guys had a lot of fun in this range here. I didn't play anything because I was done for the day, especially after this. And you'll see a lot of continuation patterns going on here, right? There's flash inside here. You can see it clearly. There's continuation inside here. There's good plays inside here. Think about this. Remember, we're heading higher now, right? We're heading higher. You could have easily taken one of these guys, whether it was this candle right here to here and project it upward, or it was this guy right here and project it upward. You now have, especially on a Monday, you would have heard me mention last week that you have a Dexter fib pinned on a Monday to an H1 that you can use to project. What do we have sitting inside here? We have the algo draw up here, we have a God speed level here, we have this inducement high here, there's 2 standard deviations to 2.5 here, right? So when you are on the lower time frame, 5 minute, 1 minute, whatever it is, there's a lot of opportunity that would be born all the way down here for continuation to the objective, which is up here. That is at least 100 points. So I want you to go back and study what happened inside here, seeing as the draw is higher and we need to get to the objective, that you would find a lot of your entries forming here. Turtle Soup, OLR, CSD, closing above here, retracement into FEGs, continuation higher. Same story here. Draw this order block out in time. They use it, they propel higher, right? Today, I didn't manage to catch the long because I got busy at work. I'm actually leaving the country on Friday to go for a family wedding. And if there's any cross I would die on, it would be an H1, right? Not even a daily, not even H4. H1 will show you the light, show you the way, so to speak. If you look at what this pushed into here, 20.04310, I think there were 2 pushes into that level at the time, right? 20.04310, and it had a retracement here. Now let's look at an H1, since we don't really know what's going to happen around here. We know there's the inducement high here taken. We know there's a Godspeed level here. We know the all-time highs are here. We have a Dexter H1 telling us, hey, this is possibly going higher. You have an H1. I'm just going to turn off the BOR because I don't think the BOR offered much in terms of an entry today. So when in doubt, we default to H1. And what are we looking for? We have a rundown, an OLR, below these lows, right here. And then we have the CSD coming in here, CSD. Whoops, CSD. So in this case, the model is run a low, close back above the range. I'm going to buy the order block, which is now being validated right here. And I was a little bit upset that I didn't get to play this one. Now let's take this here and go down to the M5. I know Gratiano did buy, I'm not sure, he may have used some EO or timed EO logic. We have 930 open here, dip into 50% off that range, goes higher, closes above here, comes back, dips, 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 and then price takes off. Now you may be lost, you're not sure what to do. Price is just fucking off, so to speak. But what you do have on your side is structure. And even if you didn't get in right here, some of the guys did, I know Gratiano did. Even if you didn't use this H1 order block to enter after the CSD occurred, you have highs here. Highs, especially, that have taken liquidity to the left previously. And what do we know about these specific highs that have taken liquidity? They house no liquidity, and we should expect a speed through them and a breakaway gap. So what does that mean for you? Sponsorship right here. Big candles closing above highs, creating a breakaway gap. Buy, buy, buy. Right? Whether you go down to lower time frames to figure it out, that's up to you. Price moves and continues to move here, and I think the market closed half day. I'm not sure. Someone, I think Slot may have mentioned that it did close, and it will be closed tomorrow. So a lot of choppy, shitty price action printing here. Now you can see that we had a retracement. We had a run up of this high, but my model tells me that if we are now above all-time highs, which was somewhere around here, all of this is uncharted new territory. So it means that every new high created technically for me is a new high, is an OLR that I need run. And I need it run not later, I need it run almost immediately. So if they created this high right here, I would have wanted retracement, then the high run, then a push down if I were to be bearish, right? If I'm not bearish and I'm not looking for any of that, then what is your expectations? That this should hold, right? That should hold. Are there any visible or order block ranges before this? Max expectation would be before this price action occurred and this OLR, your previous order block range was right here. So any retracements that do occur, right? We have this, a lot of choppy shit. Probably Friday we get something like this, or tomorrow. It means that you have this guy inside here, right? Imbalance inside the previous order block range. Max expectations, this is where your retracement should occur. If order flow is still bullish, we'll look for this to hold price and drive price higher, but we don't know where yet, right? You could be like Fuchs and use a day 5 or one of these legs here to probably predict where price may go. You can see that we are in the 2 to 2.5, failing which 3.5 to 4, all the way up here, right? We have also now closed, well, not technically not yet, right? Or maybe it did, I'm not sure. This daily candle here is closing above the previous all-time high. And what do you notice about the previous all-time high? It is a down candle. And down candles at highs, just like up candles at lows, if they are the highest candles and the lowest candles, we trust them less, because a down candle at the high becomes an order block when you get back above it. These down candles printing at highs indicate bullish delivery, just like up candles at lows, you can't trust that low, it indicates bearish delivery. Now that we've printed an up candle on a daily above the highs, I'm not super bearish. I would expect that if we get any retracements, and this is the previous all-time high, and this wants to continue higher, then we get retracement, let's draw it here, back to the all-time high. Why? Because old highs, just like old lows, are fair value for buying and fair value for selling. So any retracement, just like you probably got right here, see this? A high here, taken out. Say this is today, we get retracement back either to the OB inside a breakaway gap or FEG that's created, and more especially old highs, right? Old highs become fair value. We have 3-bar swing lows being formed, and then price pushes away. So we'll be looking for such if we want to see continuation higher. How much higher? I haven't figured it out yet. Not on a daily. We could use something on an H4 maybe. If we I could use this entire leg right here, since it's an H4 OLR right here or up here, and you can see that we are at the 1 to 1.5 standard deviation, which means this is either manipulation up here or this is going to be retracement for a silver bullet entry to continue higher to 2, 2.5, 3.5 to 4. So unless we have a situation where the daily candle right here is being closed below, right, which I doubt it would be. Visibility on the hours there. Let's double check that. Which I doubt. We're going to have situations where just like at the previous highs, we print maybe one candle like this, range day tomorrow with a wick, creates an FEG here, next candle comes, dips into it like so, at the all-time highs right here, and then we have the following day, let's say this is Monday, we have another candle opening like this, right? A wick back in, or not even a wick, and we get movement up here like this, where say Tuesday dips back into the rejection block idea here, the opening price of the middle candle, which is essentially the same thing here. There's today's candle, there's your previous all-time high, tomorrow's candle creates a wick which leaves an FEG, right? Lows created inside an FEG get run. The following day we create Godspeed levels right here, mark off the opening price like so, wait for price to show you that it wants to move away, look to buy any retracements into that opening price, and then you see what happens, right? Same idea here. So this is why I said if we get retracement back to the max expectation of the previous order block range, it should be somewhat in line with the idea of continuation of high time frame order flow, unless we close below or CSD tomorrow or one of the days after, we CSD the low of today's candle, which means we would have to get a situation that does this right here, closing back underneath the previous all-time high. This becomes turtle soup type entries, CSD. This now becomes an order block of interest to us. We'd look at that, look to trade previous all-time high or 50% right there, and we'd look for lower. But failing which, we create, since we had such expansion here, we create 2 or 3 days where we just range a bit. Tomorrow creates a daily FEG, following day dips back into that FEG, gives us about the zone here, which is an H1 FEG as well inside here, and then we look at possibility of hitting higher, right? So that's where we stand at the moment. If you guys have any questions that you want to ask me in the group after you watch this, by all means please do, and I'll answer them for you. But you can see that all of my decisions that I make or made have strong roots in how previous daily candles have closed. When I see failures like here, I immediately draw to its high. When I see this failure here from Friday above here, I wanted Monday to run its low. That's what Monday did. When Monday's low is created and fails to close below Friday's low, Monday's high comes on the menu. We've marked it off there. This guy on the daily, it's a down candle, failed to close above here. We should have ran to its low, which we did. Its high comes on the menu next. So this is all I'm doing on the daily, and I'm going down to an H1 to support any ideas that I may have, especially if you see H1 running levels or lows, then validating those H1 candles as order blocks like you see here. Those H1 candles and order blocks like this one become entries on the low time frame. I'll upload this to YouTube, and I'll wait to hear from you guys.